Hi, I'm Tim Sustak, Chief Credit Officer with Vizo Financial, and this is your FOMC update for January 2021. As expected, at its January meeting, the Fed maintained the Fed funds target range at a level of 0 to 25 basis points, as well as the rate on required and excess reserves at 10 basis points. Further, they maintained their commitment to increase holdings of Treasury securities by at least $80 billion per month and agency mortgage-backed securities by at least $40 billion per month. There was very little change in the post-meeting statement. The Fed acknowledged that the pace of the economic recovery has moderated over the past few months and that weakness was concentrated in the sectors most affected by the pandemic. They also modified their thought about the path of the economy being dependent on the COVID virus to now include the progress on vaccinations as well. Those were the extent of the changes. Some in the markets have been a bit fixated with when the Fed will begin to taper its asset purchases, feeling like the Fed may do that sooner than anticipated or without adequate warning. Some of that may be related to recent positive economic activity in areas such as housing and euphoria in the stock market, or possibly to some recent statements by Fed officials acknowledging the possibility of inflation accelerating faster than expected later in the year, or an increase in rates earlier than currently predicted. Certainly, none of that was addressed in the statement. We'll take a look at Chairman Powell's press conference and what he chose to address there after the break.
Want a payment solution that will strengthen your member relationships, enhance digital engagement, keep deposits in your members' accounts, and attracts new members? Want an app that is customizable for your brand, increases cross-sell opportunities, is easy to implement, and is cost-effective? We have it! Paymoli is our new person-to-person payment app so your members can make direct payments to the people in their lives. And did we mention, it's so easy, it'll have your members saying, "Holy moly, give me Paymoli!" It all starts by downloading the app. From there, they just enter their credit union account information. This is where the money will come from when they make payments, and it ensures the money stays within your institution. How's that for awesome? Next, they select a person to pay from their already established list, or enter a new recipient's information. All that's left to do is enter the payment information, an amount of course, and a note if they wish, and click Pay Now. See? Easy, right? The benefits to your credit union are many, and the convenience to your members is undeniable. So what do you say? Besides holy moly, that is. It's time to get your own P2P app, and Paymoli is it. Contact us to get it today.
Welcome back. At his post-meeting press conference, Chairman Powell hit many of the same points that he has been stressing over the past few meetings. The path of the economy being dependent on the virus, the Fed's response to the crisis being guided by their dual mandate of maximum employment and stable prices, the Fed's aim to achieve inflation moderately above 2% for some time so inflation remains anchored at their 2% goal, and the Fed's commitment to an accommodative stance of monetary policy until it achieves its employment and price goals. As far as recent economic activity, the chairman explained that the pace of the recovery has slowed, particularly in areas like household spending on services such as travel and hospitality. Further, he indicated that employment has slowed in recent months, with December seeing employment fall by 140,000 jobs, led by areas like leisure and hospitality. To the contrary, sectors such as housing and business investment and manufacturing have picked up. Overall, though, economic activity remains below the level it was at before the pandemic, and the chairman reiterated the path ahead is very uncertain. In the question and answer session following his prepared remarks, the chairman made it pretty clear that the Fed is focused on finishing the job of helping the economy recover from the COVID crisis, and any talk of tapering asset purchases is premature. The chairman indicated that though the Fed is currently offering substantial monetary policy accommodation, the Fed can do more if it's needed. And conversely, when the time comes to remove policy accommodation, the Fed will give the market sufficient guidance so as to prevent adverse reactions like we've seen in the past with events like the taper tantrum following the mortgage crisis. So, Chairman Powell seems pretty steadfast in his commitment to accommodative monetary policy, and his comments would make one believe that he'll err on the side of too much accommodation rather than not enough. For those in the marketplace who thought the Fed may turn the tables on monetary policy sooner, that just does not seem to be the case right now. That's the FOMC update for January. Thanks for watching, and be well.